I've coined the phrase triple-digit silver, a decade ago, and I'm seeing people now starting to believe that is actually a possibility. I think it should have happened a long time ago. In my presentation earlier today on stage, I was talking about the silver fundamentals and just the fact that even the Silver Institute's suggesting 1.2 billion ounces of consumption in 2024. I've heard numbers as high as 1.4 billion ounces in a market whereby the miners are only producing 830 million ounces a year. So, where the silver is coming from, who knows? But it is showing up in price, which is nice to see finally. And I'm still expecting higher metal prices or silver prices.
Based on the current state of the silver market, KeithNeumeyer, founder and CEO of First Majestic Silver, believes that silver prices will soar to triple digits and explains what this means for the mining industry. He expresses that silver demand is expected to hit 1.4 billion ounces in 2024, while annual production is only 830 million ounces. Despite this gap, he is optimistic about rising silver prices and future increases. The silver supply deficit for 2024 is projected to exceed 2023 due to insufficient silver production. It is also argued that deducting net investments in silver exchange-traded products exposes the market's deficit. Estimating mining production to increase by around 4% and consumption to be between 1.2 and 1.4 billion ounces, it is attributed to a demand surge for technological advancements like electric vehicles, solar panels, and wind turbines, all of which rely on silver. Neumeyer predicts that despite rising prices, the mining sector will struggle without government support. He emphasizes the need for long-term price stability to boost production. Inflation constantly pushes up costs and puts pressure on miners' economics. They may face tremendous stumbling blocks along the way from governments, capital markets, indigenous activists, eco-fanatics, union bosses, and many others. Only a couple of mining companies, First Majestic Silver and Silvercrest Metals, have held back a meaningful amount of their production in the past 10 years, though. In his assessment, KeithNeumeyer compares the current market to 1999 and 2000, predicting that big money needs to shift from large-cap stocks to the mining sector. According to Neumeyer, the stability at $30 for a few quarters is crucial. Now, we present the clips of KeithNeumeyer's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I don't think it has any impact on supply demand. I think that, because the miners themselves need long-term pricing to be able to have the confidence in making the necessary investments to increase production. And that's not happening. You also need to see governments also get in line with, getting ounces out of the ground, whether it's copper, whether it's silver, whatever metal, zinc. All these metals are very, very important in the green revolution. And, the governments are pushing solar panels, yet it takes 20 years to permit a mine. So if you're a gold company or a silver company, and you have a discovery hole, which we've seen a few in the last year or so, which is exciting to see, and stocks do okay and so on and so forth, and investors make a little bit of money, but that executive team has to finance that asset for the next 10 plus years just to get that thing permitted and get ounces out of the ground. As long as the governments don't get in line, with their rhetoric, because they're pushing all these, great ideas, green revolution, etc. But yet they make it so difficult for the mining sector. So, at $30 silver is great. We're selling silver at $30 right now, which is, so our margins are looking good. Our profits are increasing. But does it affect supply? No, not yet. It's like anything that trades, whether it's a stock or a commodity, it doesn't really matter. But, people get used to a certain price, and they will buy at a certain price, they sell at a certain price. So I think we need, the metal to stay at $30 for a good couple of quarters. And, we're in the weakest period for the metals. You go back and look at 30-year charts. June is always the low for gold and silver. And we've gone out through June, and it held up quite nicely through that period of time. And we're now in July, which is the, depths of the summer, generally pretty low volume period. Metals generally don't start to improve until August, September, October. And if silver holds up to these prices over the next couple of months, I'm expecting $35 by the end of the year. I look at this time frame very similar to 1999, 2000. I've said this before, and I honestly believe it, because we had the Nasdaq hit 5,000 in March of 2000, and over the next 2 to 3 years, the Nasdaq dropped 80%. And that was really the signal for that. All that money had to find a home somewhere. And all that money went into, well, not all the money, but a ton of the money went into the mining sector. Some went into real estate and so on. But nevertheless, you had silver at $5 an ounce, you had gold at $240 an ounce, and over the next 10 years, you saw gold go up 8 times, and silver go up 10 times, and I think that's where we are. I think we do need to see some of these big cap stocks, NVIDIA, Apple, Microsoft. I think we need to see some of the big money leaving that sector, because the pension funds, the big mutual funds, the big money is not invested in the mining sector at all. Here we have a retail conference. There's a lot of people here that have been investing in this sector for years, much of their lives. And then this is kind of the underpinning to the resource sector. But without that institutional shareholder base, it's tough for these stocks to really move in any kind of substantial way. And you look at the GDX and GDXJ, and you can see that, even though we've got $30 silver and $2,400 gold, these stocks haven't really moved a whole heck of a lot. So we really need the institutions back in this market.
The World Bank analysts noted that the gray metals prices surged 12% higher in April than the prior month after seeing a stable and less dramatic Q1. This recent increase in silver prices, mostly attributed to the recovery of industrial activity and some of the factors influencing gold prices, brought the gold-to-silver price ratio closer to its 10-year average, they said. KeithNeumeyer discusses the influence of silver's short-term price on reserve calculations, noting that banks typically use a 3-year average for long-term projections. He expresses skepticism towards J.P. Morgan's raised silver price target of $34, suggesting that the bank's motives in the silver market are questionable. There have been 2 bull markets since 2020. First, on the 25th of March 2020, the price bottomed out at $13.96 as governments began restricting personal and business freedoms in response to the COVID-19 pandemic. The price rose above $28 by September of that year. Then, from its September 2022 price of $17, the price has risen and remains over $30, so we're still technically in a bull market. Let's get back to the interview.
It changes your cutoff grade, so it does have an impact. But the QP, or the qualified person, who's responsible for that role, he has to follow a strict regulatory system. So, with silver at 31 today, we're not going to use 31 for our reserves, because, it's been too short-lived. So what they tend to do is use a 3-year backward average price. We measure that against what the banks are saying as well. So we'll look at the big banks, BMO, TD, and so on, and see what their long-term projections for the metal is, and we'll compare that. And then we'll even pick up the phone, and our CFO will call other CFOs of mining companies in our peer group and say, hey, look, what are you going to be using for your 2025 metal pricing? And I just received an email yesterday from my chief operating officer asking me what I'm thinking. So we're now going through that process for 2025. I don't really look at what the banks really do anyways. So I'm always suspect. And
just given JP Morgan's role overall in the silver market.
Yeah, they're the biggest player in the space. So, are they trying to suck people in so they can sell more, or they actually believe it's really kind of a waste of time talking about JP Morgan and these other banks?
No, it's fine. I saw that pop up, I think yesterday or 2 days ago. It sort of popped up in my feed.
I worked for the banks in the 1980s, right? So I worked for 3 of the largest banks in Canada from 84 to 89. And, I know, they don't like taking a lot of risks. So, they transfer their risks to their clients. It may show up on their books, but some of the rhetoric that you see around these banks, sometimes I'm suspicious about who's actually behind it.
If historical trends and current market conditions hold, the potential for silver prices to reach new highs seems increasingly likely. silver will likely rise to $100 an ounce, setting a significant top. This might happen in 2026 and 2027, certainly not 2024 and 2025. Silver requires exceptional conditions like rising inflation or an extreme shortage to rise to $100, which might not be its endpoint once it clears all-time highs. What are your thoughts on the future of silver prices? Will the market see the anticipated surge, or will challenges in production and investment hinder growth? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.